Good morning, everybody. Hey, welcome to Thursday, January 23rd. I hope your day is off to a great start as we look at the markets and where they're at today as we get ready to go online here in just a few minutes. I'll share this with you right now. You can see a lot of red this morning as we get ready to start the day. And so I hope that, like I said, your day is off to a good start. And we'll be with you in just a moment to kind of shed some light on what happened yesterday and what we can look forward to today.
5.7, the Highlands Light FM. There's Avril Lavigne, and I'm with you. Yep, can't get rid of me. Well, the road piece going to play us a Pat Benatar tune. That's pretty cool. Hey, Phillip's on the line. Time to take a ride to Statler Financial Services in Sebring. Good morning, Phillip.
Good morning. Hey, Scotty, it got a little warmer. There's a little fog out there, but hey, it's a beautiful day today when we start off. So looking good.
Yeah, lots of good stuff to look forward to and a lot to get to today. Let's begin with this health scare in China and its effect on the markets there, Phillip.
You know, we continue to see the issue of the coronavirus. It has now kind of hit Singapore. And so we're looking at things like in China, you know, one of their big celebration is the Lunar New Year. And this year happens to be the year of the rat. And so they're really canceling all of those celebrations and cutting back in fear of this outbreak. And so I think that we're seeing that really start to affect some of the markets overseas that we see. I mean, Asia is down significantly. We got Shanghai down almost 3% this morning. Hang Seng's down over 1.5%. So the Nikkei's down almost 1%. Those all over in Europe are trending all pretty much down. European markets are a little bit mixed, but for the most part, they're mostly down this morning by 0.5%. So, you know, that's weighing heavy on all the markets because of the uncertainty. Scotty, uncertainty is the one thing that markets hate more than anything, and this coronavirus is creating some new uncertainty out there.
Right. I don't mean to make light of it because it could be a very serious thing, I suppose, but it's interesting to me, just as a layperson, when it comes to this sort of thing. A few people get sick in China, and it affects a lot of stuff, Phillip.
Well, it does because it's a hub of the world, just like the United States is a hub of the world, and so people are traveling from there to other countries, and if they're infected with that virus, then that makes it easily transmittable across the seas, and so that becomes even the bigger uncertainty out there is what is that going to be? How is that going to impact the other countries, and then in turn, what's that going to do to the markets?
Right. Hey, speaking of which, let's talk about one of your favorite things. I understand you have a whole pile of earnings reports to cover.
We do, man. Earnings, it's finally getting some earnings seasons to come into play here because we don't have much on the economic front, you know. So we'll talk about some of them. We got Comcast reported. They're the parent company of NBC, Universal, and CNBC. They beat by 3 cents a share. Revenue came in well above forecast. They saw a record quarterly net additions in customers, and they also raised their dividend by 10%. So looking good there. They're trading up this morning about 1.5%. They'll actually open, Scotty, at a new 52-week high. Right now, it's at $48.15 a share. So good things happening there. Comcast, Procter & Gamble, they beat by 5 cents a share. The company also raised their full-year guidance in their outlook. However, they missed on sales estimates for the first time in 5 quarters. A lot of that's coming from the strong dollar, and so they're getting hit a little bit because of that. They're down 1.6% this morning, and I think that's maybe some profit taking because they were up pretty close to their 52-week high when they closed out yesterday. So we had them. Now let's look at the airlines, Scotty, because we have 2 airlines reporting today. We have American Airlines and Southwest. And so one of the things that seems to be in both of their reports is the issue continuing with the Boeing 737 MAX, and that it continues to be grounded. And I think we're coming up close to a year of it being grounded, and it is affecting the airlines. And so American, they came in and beat the forecast by a penny a share. Revenue was basically in line, but they said that the 737 MAX grounding forced them to basically cancel 10,000 flights during the quarter. I mean, they're still seeing, because they're profitable and they beat on their other metrics, they're still up about 0.6% this morning, and so they're compensating for it and making up for some of those differences. When we look at Southwest, they came in, their report's a little hard to understand because they had one of these items that was excluded. I guess they got some compensation from Boeing, and they put that compensation into their employees' profit sharing plan. And so they beat by about 7 cents a share because of that. And so they had a decent quarter anyway. Revenue was ahead of what they expected. They're still dealing with the 737 MAX issue, and they're trading down about 0.6%. So what American Airlines is up, Southwest is down right now, and so some stuff there. Another popular name we have today is VF Corporation. Now I'm sure you don't recognize that name, but but you'll know what they make. They are the home company, parent company of North Face and Timberlane brands. So they're the makers of those. They beat by 2 cents a share. Revenue though was below forecast. One of their brands, the Timberlane brand, is having some weaker guidance than expected. They're if Dave was here, he'd say this is probably on his big losers list. They're down almost 6.5% this morning before we get going today. So we got some things there, and that's really about it on the earnings front. I mean, we got a bunch more coming in this week, and some good things there. On the economic front now, we've got a couple things. Yesterday, after you and I talked, we had existing home sales come in. And existing home sales were slightly above what was expected, which is a good sign for our real estate friends and that market out there. And then this morning, we had the first-time unemployment claims come in, and they came in at 211,000 first-time claims for last week, which is a lot, but it's still towards the low end, and it's better than expected by a couple thousand. We had expected about 214,000. So some good things there. Still on the employment front, I mean, we're still at better than full employment, so we can't really complain about that.
Sure. All right. Well, good stuff, Phillip. What are we looking forward to today? And make sure you remind folks how to get in touch with you.
Absolutely, Scotty. Yesterday when we ended up the day, we ended up down. Well, not really down. It's kind of a mixed bag. The Dow was down $9.77. But Scotty, it had been as high as it was up almost 100 points at one time. And the S&P 500 ended up about $1. The NASDAQ ended up about $13 up. All of those indexes were much better than that earlier in the day. And so because of that coronavirus scare weighing in on the marketplace and on the news media, that caused a lot of our indexes to start to fail during the day yesterday. Well, today we're kind of seeing the same thing. We're seeing the Dow down about 0.25%. We're seeing the S&P 500 down about 0.1%, and we're seeing the NASDAQ basically even right now as we head into the morning. So a lot of red out there. We look at the commodity side of things. Gold and silver are both trading down. Gold not by much, but silver's down by about 0.9%, $17.66 an ounce. And then crude oil is significantly lower than where you and I talked yesterday, Scotty.
Okay, good.
It's down. Yeah, you're liking that, aren't you?
That, yeah, I like that one.
down almost 2.5% this morning to $55.38 a barrel. I mean, that's a big drop from yesterday. And a lot of that I saw was due to the estimated crude inventory was higher than expected. So that's
Okay.
helping oil prices this morning.
Okay.
And
Good.
then folks can get a hold of us by giving us a call at 863-382-0037. Folks, listen, if you are getting close to retirement, 5 to 10 years out, or already retired, it's a great opportunity to get a financial x-ray of your current portfolio to make sure you don't have too much risk compared to your risk tolerance level. Give us a call to schedule that, 863-382-0037. Catch us online at statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
All right. Always a pleasure. Thank you, Phillip. We'll do it all again tomorrow. Looking forward to it.
All right. Sounds good, man. Talk to you tomorrow.
All right. We'll talk soon. There's Phillip Statler, Statler Financial Services. Give him a jingle at 382-0037. Remember,
folks, I want to thank you for joining us today as we get ready to wind down tomorrow, the last day without Dave here. I hope we've been able to impart a little bit of information here and there to you. But again, I can't stress how important it is to know how much risk you have in your portfolio. Give me a call and let's go through our no obligation financial x-ray review. 863-382-0037. Hey, until tomorrow, have a great day.